Hello and welcome to The Buck Stops Here. I am Catherine Murray. Well, certainly since Trump won the U.S. presidential election, we've seen the markets really on quite a tear to the upside, maybe leveling off a little bit here. But let's get some perspective in terms of whether or not we're going to see a Santa Claus rally, what sectors, what area of the market, and perhaps most importantly, what we might see in 2025. And for that, we're bringing in a veteran investor, Barry Allan. He is the CEO of DMAT Capital. Barry, great to be with you. Thanks so much for joining us.
Yeah, good to see you, Catherine.
Thank you. So I want to start with the Trump election because I really think that, or the presidential election, I really think that, well, if you look at the markets, they're telling you that there's going to be a lot of change coming about from a regulatory perspective, perhaps opportunities, a pro-growth economy. What do you think? What do you believe?
Well, the one thing I think it's reasonable to expect less regulation. The whether we and they will have pro growth, but whether we get that growth or not remains to be seen. If you look at other situations around elections, the markets jump to a bunch of conclusions, and they're almost universally wrong on those and how they play out. So I wouldn't get too excited about what the market is doing right now. I would also say though that it's not necessarily that doesn't necessarily mean I'm negative. I just think that the assumptions the markets are making on what politicians might do are historically, wildly wrong, and
Mm-hmm.
so we'll see how this one plays out. But the market seems to have a very defined view as to what they think Trump is going to do.
So it's interesting when I read your notes ahead of this, it did, and I know you, and I feel like sometimes, I should have said you're a veteran fixed income investor. The fixed income investors tend to be a little bit more negative, whereas the equity investors like myself tend to be a little bit more on the optimistic side. And I did read, I think, your words and feel that you were a little bit more on the positive side than normal. So describe what you're seeing and how you do view maybe 2025.
Yeah, well, I just look, politicians come and go and they rarely accomplish much. So we focus on the economic fundamentals, and the economic fundamentals are pretty good. The labor markets are holding in really well. The economy is doing consistently better than people think. The real issue is around inflation and valuations.
Hmm.
So I'm cautious on the equity market. It's because of valuations, not because of economic fundamentals.
Understood. But when you do take a look at the economic fundamentals, we've seen some of the most recent quarterly earnings, and it does seem as though the consumer perhaps might be on the weak side. I mean, it's difficult to say for sure because, different retail companies have different fundamentals and they focus on different areas. But take a look at Target. I mean, that was down significantly this week, but Walmart was up.
Well,
So that could be just a bit of a mixed shift, Target versus Walmart, what they carry and what they focus on. But do you not have some concerns on the consumer right now?
well, certainly the consumer is, the high end is holding everything in. And that's fundamentally unhealthy in the long term. The markets are economy is strongest when it's broadest, just like stock markets. And when it's bifurcated the way it is, although it's been bifurcated for 20 years ever since QE started coming in.
Hmm.
The rich are still getting richer, and the poor are still getting poorer. Uh, but fundamentally, the economy is okay. It's softening slightly, but it's at very, decent levels. And unless interest rates go up
Mm-hmm.
materially from here, there's reason to expect that the economy will hold in reasonably in 2025.
Well, I guess it does come down to, what does inflation look like and where are we going with interest rates? We'll discuss that right after the break. We'll be right back.